Okay, good morning, guys. My name is Gavin. Welcome to Alphachain's weekly market brief. It is Monday, the 28th of February. It's the last trading day for February, and we head into a new month, the month of March. And what a week it was last week. A lot of geopolitical risk had driven market conditions. And that's what we're going to do. We're going to have a quick review of last week and also discuss the upcoming week ahead. So yeah, let's focus on maybe one or two assets specifically that gives us an overview of what had taken place from last week's session. So let's start with equity-wise. We'll have a look at the S&P 500. We'll probably put it to a 5-day view. Okay, so we've got a 5-day view. And most of the news that was trending from last week. So if we look back, so this is Tuesday from the 21st. Okay, so we're looking from the 21st, which was last week, Monday, straight through to where we are currently. So last week was all about geopolitical factors. Okay, most importantly, the ongoing negotiations that were taking place with Russia and Ukraine didn't really lead to anything of relevance where they could both take away from this. And then an invasion began. An invasion began overnight, Wednesday morning, Tuesday overnight. So Tuesday overnight, Wednesday, 3-4 in the morning is when we had the announcement from President Putin. And it kind of did shock the world. It did shock the world. No one expected an actual invasion to occur. They assumed that negotiations would have taken place, diplomatic sort of views would have come to light, and therefore something would have been put on the table, and then both would have agreed. But it seems like President Putin was not happy with any of the diplomacy meetings that had taken place over that period of time, and there was a number of weeks that they had to discuss these matters. So we had a large shock in the world where Russia began their military action on Ukraine, mostly sort of entering through multiple regions. So it wasn't through Russia's border itself. They also entered through Belarus. And there was, I'll probably bring up a map a little bit later, but okay. And so what had taken place? What had taken place from this? So we saw a full-scale military deployment, Russian forces entering into Ukraine from multiple regions, different geographical locations, and the markets really went into sort of terror mode. It went into a state of panic. And that's where we saw equity markets had sold off substantially. Okay, so equity markets had driven lower. And if we're looking at the 23rd, it will be sort of this region here. So if I just highlight from this point over here. Okay, so just looking at sort of where we are over here. So we're looking at 23rd. This would have been sort of early market action. If we scroll back a little, let's have a look, 23rd. From this point onwards. Okay, so a lot of the price action and the movement that occurred over this period of time, we'd seen a sell-off starting from the 23rd, early hours of the morning, straight through to the majority of that day. The majority of that day leading into sort of the 24th was also more selling pressure. Now in total, if we take it from sort of the high in this region here to these lows, it was a 5.64% sell-off, a 5.64% sell-off in the S&P 500. Okay, so just that would be sort of one of the key factors there, is the fact that markets initially sold off, but look what happened thereafter. Look at where markets led to thereafter. We're back to where we were initially, right? We're back to where we were at the beginning of last week, pretty much. If you're viewing sort of what's happened so far, even though overnight we see markets move slightly into risk off, and I'll tell you a little bit later why that's occurred. But the rest of the session, the rest of the sort of trading sessions from Thursday through to Friday, markets more than rebounded. We had a much more sort of bullish close at the end of the week. So markets rebounded swiftly. And why did that happen? Why did that happen? So if we're looking at just specifically equity markets, this roller coaster of a move that happened last week, well, yes, we realized that the initial reaction to Russian military action into Ukraine, what led to a strong sell-off, and all sectors getting hit, all sectors, all sort of markets going into panic mode. But this, this made sense as at that moment, because no one could really ascertain what effects or repercussions of this invasion would have. Okay, but Thursday and Friday, what it showed is that the market decided that whatever effects the situation has on the global matters or global markets, it didn't seem to escalate any further. That's the key point there. It didn't escalate any further. And that's what I'm suggesting there is, were there indications of military action from European nations, from the US or the UK? Neither. None of them. None of them gave any indication of military action. And as a result, that's where we saw markets buoyed back to the upside, recovering those losses. And, that was a sort of the key part from last week's trading session, how quick markets flip from risk off to risk on. It went initially sort of instantly panic mode, and all of a sudden markets rebounded, assuming that we've exaggerated the panic here, and there isn't going to be further military action from those nations that I've just mentioned, and therefore we saw markets rebound. Coming into from the weekend news, if we just focus on the weekend news itself, if I just remove this, let's zoom in the most recent. So already you can see markets gap lower. Okay, normally, on TradingView, it fills the gap in, but generally this is where markets open, sort of at these lows here. So that's where markets closed. This is where markets opened Sunday overnight, 11 p.m. Now, it's starting off risk off. It's starting off risk off. It's not got any direction at this moment. Markets sort of stalling in this region here, testing around the 43.10, 43 sort of handle. So what's happened? What's happened over the weekend? Well, nations around the world, we're looking at Germany, Canada, US, UK, European Union, right? They've all sort of, given their views of what sanctions that they're looking to apply. So now we're seeing an increase of sanctions being implemented against Russia, right? In addition to that, there is indication that Russian lenders will be removed from the SWIFT banking system. Okay, and there is also indication of corporations such as BP wanting to dump assets that they own that are linked to Russia. Okay, so we're seeing a number of sanctions, the removal of this from the SWIFT banking system, corporations not wanting to associate with Russia. So all of these factors are coming to light. In addition to that, there has been a lot of these nations, like the UK, like the Eurobloc, have given armory and weapons to Ukraine. That's another sort of factor there. So we're not actually seeing any military action by these nations, but they are providing the tools and the machines for the Ukrainian soldiers, for the Ukrainian military. Now, from there, we did see that Putin over the weekend had suggested to keep his nuclear forces on high alert. Okay, so that's not really suggesting anything, but it's a threat. It's a threat. It is a threat that shouldn't be taken lightly. So he is threatening nuclear, right? But at the same time, we now know that, okay, he's threatened that, for example, right? So we know that he's got the nuclear forces on high alert, which pretty much means that they are preparing for a nuclear strike. So all of their sort of, the nuclear forces are getting prepared for potential nuclear action. At the same time, we do have Russia and Ukraine diplomats wanting to meet up on the border of Ukraine and Belarus for another meeting. There is another meeting that is likely to take place for peace talks. And that is expected to take place today. But there has been hints from PM Johnson, from even Zelensky, the president of Ukraine, suggesting that he doesn't see a positive outcome from this meeting. right? And nor do I, to be honest with you. I don't see how Putin. I did see some video over the weekend where there's satellite tracking all of the sort of action taking place in Ukraine, the amount of military that are coming in. So one thing we do know is that the Russia has not applied the entire force. All of their sort of military operations on the borders around Ukraine, not all of them have gone into Ukraine, right? So there's only small portions of it. Russian soldiers have gone in. Now we're seeing a larger number of that have crossed into the border of Ukraine from yesterday's news. So the question is, how will these talks go? Let's see. We'll have to wait and see and go based on sort of what we hear around this. So yeah, that's where the situation is at this current moment. This week is likely to be focused around this geopolitical concern, this geopolitical risk, where potentially if there is nuclear action, right? If there is nuclear action, this can lead to the UK, the US, all wanting to sort of get involved to sort of resolve this matter as well. So yes, I'm just thinking, was there anything else that I wanted to raise as well? So yes, I mentioned the nuclear information. Then I've also mentioned in regards to more military sort of being driven into Ukraine. They didn't use their full resources as of yet. At the same time, we do know that there's been over 300,000 Ukrainian migrants leaving Ukraine, crossing over into, for example, Poland. So yeah, it is certainly a major concern, humanitarian sort of concern, but also it is market related, and therefore you must trade based on incoming information released on a hourly basis, and whenever we get the next information. So yes, that's sort of where we are at the moment. So risk off initially from the news of the weekend, especially with the word nuclear being mentioned by Putin. But at the same time, markets doesn't seem like it's moving continuously to the downside as of yet, as markets have already opened. European markets have already opened. We're waiting for more information to come through. Let's have a look at what was the outperformance from last week. The outperformance from last week, and again, it was similar to the S&P 500. We had a large sell-off, and all of a sudden a rebound in risk-on mood. But at the same time, with the flip of this with gold, okay, just looking at gold and having a 5-day view, you can see how quickly markets had driven higher. So from these lows in this region here, all the way up to sort of the highs up there, we're seeing a 4.5% sort of move to the upside, 4.5% move to the upside. Looking at the higher time frame, we broke through some key levels, and you can see how markets wanted to test the 1970 handle. Since then, a substantial collapse. Thursday, Friday session, retreating back to those lows again, We're sort of hovering around the 1900 figure. We're now hovering around the 1900 figure. So as I've mentioned, we know, okay, equity markets fared quite well overall at the end of the week, whereas precious metals had a bit of a whipsaw overall. So it's a super strong week overall. But one of the key factors that we can take away from the action that we saw from last week is gold is still seen as a store of value. It is a safe haven and a store of value. Okay, so it is the go-to vehicle if you're looking at going to safe haven or a store of value. Okay, another area to focus on as well is the oil market. So looking at oil. Now, if I maybe sort of switch up to slightly higher time frame, well, we want to sort of go from the 21st, sort of in this region here. So markets were trading at the beginning of last week around the 93 handle, and then price towards the midweek had achieved the $100 mark, the $100 barrel mark, and surpassing this, and then retreating back to where we are now. We're still in the positive around 97. So, overall, oil did rocket significantly higher, and that was on the fear the worst for global escalation and also oil supply problems as well that would come out of this. There was an oil refinery near Kiev that had been blown up by Russian forces over the weekend as well. So yeah, just be mindful of how you trade oil in the upcoming session. Let's switch over to a different view. Just give me a moment. Let's have a look at some of the FX markets. Okay, so the outperformance came from the dollar index. The dollar index had risen sharpish. Okay, so, and that's gaining on this Ukraine situation unfolding. So what we're seeing is risk, even though we saw risk rallying in the latter stages of last week, the dollar did give away some of those gains made in the sort of final end. But overall, we had a very strong rally. We had a very strong rally in the dollar index. We also saw bonds retreated by the end of the week, but bonds had initially driven higher, where now the yield had fallen down to around the 1.9% mark. Okay, we're down to that 1.9% mark. Also looking at cryptocurrencies. Let's switch through to number 2. Okay, so we're on number 2 screen. Yes, from a cryptocurrency standpoint, what can we highlight? What would be sort of the key factors that we could sort of take away if you're looking at cryptocurrencies? Well, one of the key areas that I would want to sort of highlight is the fact that even though, yes, cryptocurrencies have been sort of given that view previously where it's seen as a store of value and is a safe haven. Yes, it is seen as a store of value, but is it a safe haven as of yet? It's got to go in line with the adoption rate. There is not enough individuals that have adopted cryptocurrencies and Bitcoin in particular for it to be seen as a safe haven just yet. Right? Even though the tokenomics behind Bitcoin suggests that it is a store of value, but you still need a high level of adoption across different types of market participants, from the scope of investors involved in this space before it can be seen as a store of value and be traded as a store of value and as a safe haven, which is more important there. And that's what we received from last week's session. So from last week's session, cryptocurrencies exhibited sort of a great amount of volatility with this Ukrainian situation unfolding, but it is seen and regarded more as a high beta risk proxy. Okay, so that means that in times of uncertainty, it's more likely to be seen on the risk curve, one of the highest risk assets that there is on the risk curve, and therefore a lot of the profits will be taken out of this and put into something safer, such as the US dollar and the bond markets. Okay, and it's still seen as a high beta risk proxy. So yes, that's sort of the key factor that we could see that had taken place in the cryptocurrency field. Yeah, I mean, overall, markets sold off. It's almost testing sort of the 34,000 handle on Bitcoin. We saw ETH back down to sort of those prior lows around the 2,300 mark. It's rebounded since that point, but again, over the weekend, the flows don't look positive. Okay, the flows actually sort of turned downwards. I mean, right now, Bitcoin's just trading just above 38,000 and Ethereum's above 2,600. So risk is key, right? When there's a panic situation and individuals are looking to move from risk on to risk off and looking to safe havens, at this current moment, Bitcoin cannot be seen as a store of value and a safe haven just yet. Okay. Yeah, so those were sort of the key points that I wanted to share with you from last week's session. The week ahead, as I've mentioned, this unfolding events around Ukraine and the invasion that's taking place at this moment by Russia. They have a meeting that's set today. Any outcomes from this will be sort of determined how markets react. Markets seem a little bit cautious sort of start of this week. We, also, in addition to those peace talks that are taking place today, there are a number of other data points that you need to be aware of for the upcoming week. Now, we do have some earnings to be sort of highlighted as well. So there will be earnings this week that you might be mindful of. So, for example, Best Buy, ITV, Taylor Wimpey, Target, Zoom, Associated British Foods, Aviva, Dark Trace, all of these companies are looking to sort of define their upcoming earnings. Yeah, but in addition to that, from a macro standpoint, the sort of the key data to sort of keep an eye on. Well, firstly, Tuesday overnight, so Monday overnight, Tuesday early morning, 3:30 a.m. we have the RBA, Reserve Bank of Australia. So we have the Reserve Bank of Australia in regards to the interest rate decision. Now, no change is expected here. So no change is expected here. Okay. In addition to that, if we sort of move along, you have some additional data. We have the GDP month-on-month figure from Canada, ISM manufacturing PMI from the US. Going into Wednesday, Wednesday is quite an important one. Well, firstly, we have not only the OPEC meeting that's going to be taking place, and of course, oil is a very important factor, especially what's happening with Ukraine and Russia. You know, that any outcomes from this will have a direct impact in the oil markets or its proxy currencies that are commodity based, like Canadian dollar. But at the same time, in Canada, we do have a rate decision. And in this case, there is a rate hike expected. There is a rate hike expected of 25 basis points. So just be mindful of that. And just be mindful of sort of other data releases throughout the week. The next one thereafter that I'm going to be focusing on is, of course, the Fed. Heading into the new month, we have him testifying and sort of give us some indications of the next potential rate hike on the 16th of March. Something to sort of suggest there is from last week's session, from last week's sort of, you know, geopolitical factors that have come to light and are the major concern at this current moment, and is the key theme running in the markets. There has been a reduction in their potential rate hike probability. Okay, so a 50 basis point rate hike is not as expected where it was once prior to what had taken place from last week's session. So that probability has been reduced. I'll share that shortly with you guys. I have the image for that as well. And then at the end of the week, to sort of top off those sort of end of the week, Friday session will be around the non-farm payrolls. At the beginning of the first Friday of any month, we have non-farm payrolls. We have, you know, the labor market sort of numbers in the US. So that will be sort of high on the agenda as we close the week. Of course, as I've already mentioned, the major theme at this current moment is the ongoings with Russia and Ukraine. So just be mindful of upcoming news that are related to this as well. Okay, thank you for joining in this session. If you have any questions, please do add it in the chat. Other than that, enjoy the upcoming trading week, and I'll speak to you soon. Take care. Bye-bye.